Good morning everyone, and welcome to another RF Crypto video. Today is a good day for crypto. The last few days have also been good. We have seen the global crypto market cap over the $1 trillion mark for the first time in many weeks. The price of Bitcoin has shot up above $22,000. Ethereum's price has shot up about $1,465, and its price has gone up by a whopping 30% in the last 7 days. Similarly, Bitcoin has gone up almost 9%. Ethereum's recovery has been extremely impressive. Last 7 days, 28%, and last 24 hours, 7%. The rest of the market is also in the green, with Solana raising some of its losses and seeing a almost 20% increase, Polkadot 10% increase, and Polygon a whopping 63% increase. So the markets are doing pretty well now, and we are seeing a lot of green in the market, a lot of positive sentiments, a little bit less fear. There is still quite a bit of fear in the market, but it's a lot less than what it was a few weeks ago. If you look at it, the fear and greed index was almost at zero a few weeks ago, and now it's in the double digits. Looking at the price of Bitcoin, we saw a steady increase when it was at 18,800. Saw a steady increase, tested the $20,000 psychological resistance level, went down, and then shot up again. And then it really broke through because it just kept on going up. And it kept going up, going down. The bears got in the market, trying to pull it down back to the $20,000 psychological level. But then the bulls got the best of the market and the prices shot up with these three massive green candles, which saw the price of Bitcoin not only overshooting the $20,000 psychological level, but also the $22,000 resistance level, which is now the new support level. The next resistance level to be tested is 23,000, and let's see if it goes towards it. I mean, it is already heading in that direction, but knowing the crypto market and knowing how Bitcoin reacts to news, this may be a short-lived gain, and the prices might as well just drop back to 20,000 as it did here. So Bitcoin's price breaks above 22,000 as stocks rally. So the reason why the crypto and stock markets rallied is because recession fears eased after the June payrolls impressed and wage growth remained strong. So June payrolls are very impressive. Unemployment is steady with new jobs getting into the market and qualified individuals being able to find jobs quite easily. Also, wage growth was quite strong. And this has caused the price of cryptos to go up. Although it's a bit counterintuitive, we're actually supposed to be seeing a slowdown in wage growth because the growth in wage causes a further increase in price, which leads to higher inflation, which we're suffering from right now. However, the markets don't react that way. Whenever there is good news, such as wage growth being strong, they react positively, and this is what happened. But there is the other side to it, and I think that's why we should proceed with caution. And I think that this boom is a little bit short-lived due to the fact that the Fed has the all-clear sign to hike rates aggressively, and that would lead to a sharp deceleration with the economic data by the end of the summer. And financial markets will be extremely volatile, especially the crypto market, because it's a riskier asset. And I mean, if the growth decelerates by a lot more, then we might see a recession. So Avalanche's John Wu says that traditional finance interest, or TradFi interest, in crypto has absolutely not gone down. So it may be crypto winter, but traditional finance institutions are sticking around and continuing to influence the crypto space. Wu said that companies like JP Chase and Societe Generale Forge, which is a subsidiary of the actual bank Societe Generale, are examples of how financial institutions are still innovating during crypto winter and paving the way for broader crypto adoption. And one example is that JP Morgan already uses its own stablecoin, which is called the JPM coin. It's actually backed one-to-one to the dollar, and it is a tokenized form of the US dollar deposits in the bank, helping facilitate transactions for institutional clients due to the fact that it's cheap and very quick. And Wu sees the project as a notable on-ramp for institutional investors looking to ease into crypto. And what he means by that is that it is sort of like an entry point for institutions trying to invest in crypto without actually being directly exposed to it. And this indirectly, and in some ways directly, leads to broader crypto adoption. He also referenced recent efforts from JP Morgan with the Monetary Authority of Singapore and DBS Bank Limited to set up a DeFi project around wholesale lending geared towards financial institutions. So JP Morgan is really focused on getting institutions on board into crypto and making them adopt crypto actually. And if they're going to adopt crypto anyway in the future, JP Morgan wants to be the first one in the race. And they're doing so successfully by creating this JPM coin. And now they want to create a DeFi project around wholesale lending using crypto. Another project is that decentralized stablecoin issuer MakerDAO approved a $30 million in DAI lending to Societe Generale Forge. The company will pay for the loan by issuing OFH tokens, a digitized version of covered bonds backed by home loans and rated AAA by Fitch. So this $30 million loan will be paid by OFH tokens, which is already a tokenized version of covered bonds, which is fully backed by home loans. So these tokens are in the blockchain, and these tokens are basically bonds that are covered and relatively safe, especially because Societe Generale is such a massive bank. And it's interesting to see how the market is developing and how tokenization is taking place. I would never imagine that this would happen, but here we are. And as Wu said, it really is a spectrum in terms of how these companies are approaching investments in the blockchain, and the amount of stuff for institutional purposes has only increased. These big companies are coming up with innovative and fantastic products for their institutions to come on board and invest into crypto. So out of interest, how much does it cost to mine one Bitcoin today? JP Morgan estimates that the production cost to mine one Bitcoin has dropped from 24,000 at the start of June to just 13,000 today. And as long as the price of Bitcoin holds above this cost, a mining operation remains profitable. However, there are other companies that don't quite agree with it, because they basically say that JP Morgan is just giving a figure without taking into account a lot of factors that go into the costing of one Bitcoin. And according to data pulled from Macro Micro, the production cost is still above 17,700. But obviously this depends. It is a range. We can call it a range between 13,000 and 17,700, because this cost depends on the kind of rigs that are used, the cost of electricity, labor cost, and facility maintenance. So if all these costs are cheap in some areas or some regions in the world, I know that, for example, if they have mining operations in El Salvador, the cost of labor and electricity will be a lot lower than in the US. So there, producing one Bitcoin will be cheaper. So with the majority of public miners running the latest generation gigs, and with strategic power management contracts in place, the price of Bitcoin is $12,000. So to mine one Bitcoin costs $12,000, because if you think about it, these Bitcoin miners are incredibly massive and they're fully loaded. I mean, we have companies such as Marathon Digital Holdings, Riot Blockchain, Core Scientific, which have a lot of money in their disposal, so they can afford the latest generation rigs, and they can afford to create energy contracts with electricity providers to ensure that they get the best rates and the price of a Bitcoin mine stays low. However, Bitcoin miners have felt the crunch. Despite the fact that they're making profits, their stock prices have decreased significantly since the crypto winter started. Two examples are Marathon Digital Holdings and Riot Blockchain, down by 73%, and Core Scientific by 81%. So it's not only a matter of them making a profit, but investors are also seeing this as a very big red flag and pulling money out of these mining companies and probably shifting it to safer assets such as stocks and bonds and gold. Australian central bank governor favors private sector crypto technology, but they still say that it needs strong regulation from the government. So the governor, Philip Lowe, said that the private solution is going to be better for crypto as long as the risks are mitigated through regulation. And he's completely right. There needs to be regulation in order to mitigate the risk of private crypto technology development, due to the fact that there are a lot of scammers out there. There needs to be a controlled development so things don't go out of place and don't go out of whack. And the public needs to be protected. Because if you look at it, there have been so many scams and blockchain used for evil that, we need regulation to prevent this. And all of this has been happening because of the lack of regulation. And Lowe suggested that strong regulations or even state backing could help mitigate the risks. Despite this, technology will have to come from the private sector. And they will be able to develop the best features because they have all the funding, they have all the technology and they have all the right people to help develop it because they have profit in mind. So Hong Kong Monetary Authority CEO Eddie Yu backed Lowe's opinion that stablecoins should be scrutinized more closely. He said that reliable stablecoins would in turn reduce risks in DeFi, where stablecoins basically act as currency. And what he's saying is that there needs to be clear-cut regulations. You need to control stablecoins, ensure that they're backed one-to-one, ensure that they're liquid and solvent, and the risks basically will disappear and it will act like a currency. You also added that the technology and the business innovation behind these developments are likely to be important for our future financial system. And he's hinting at the fact that our financial system is going through a revolution, it's becoming digital, and we need to keep an eye on these developments because this is the future. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please consider leaving a like, hitting the subscribe button, and sharing this video with your family and friends. Invest wisely, and cheers.